Hello, hello. What's going on, guys? Happy Thursday afternoon, morning, wherever you're at. It's currently lunchtime where I'm at. Let's talk some stocks. So this morning we put out our Future Leaders Report. This report's focused on identifying opportunities in the market, stocks that are potentially breaking out into new all-time highs that have recently been listed. So a lot of the times, these stocks in particular are going to be already going through some sort of distribution phase, markdown phase, accumulation phase, and either breaking out into 52-week highs or all-time highs. Over the last 7 or 8 months, this has been one of, if not the most profitable setup that we have traded. Time and time again, a lot of these names have broken out and continued to hit new highs over time. We're just in that type of market right now. I know everybody is worried about everything all of the time, but right now, the market has been rewarding these all-time high breakouts in mid-caps. So that's what we're going to focus on right now. Let's flip over and I'll show you the actual report itself. This was the report that went out this morning, May 23rd. And what I want you to first notice is how many stocks are on this list that were also on the same list last week and the same list 2 weeks ago. Time and time again, we are finding that the strongest stocks tend to gravitate towards those 52-week highs week over week. So if you're focused on these on a day-to-day basis, or even worse, an intraday basis, you can get shaken out. Some of these are not as liquid as some of the large and mega cap names that most people trade, and so they do have higher volatility. Intraday can really shake some people out of some good positions prematurely. If you're able to focus on the broader moves, understand where we're at in terms of market cycle, etc., these things set us up for some big wins. So let's talk through some of these. A lot of these are names that we already own. I'm going to give you a quick glimpse on some of the names that we own, show you when we opened them, etc. Market not doing too great, by the way. Gapped up. Nvidia looked great, pulled the entire semiconductor industry up with it, and we are now red across the board in every single sector. SPY has filled the gap and is now down red. The dollar has popped up into green territory. Not a fun day to be opening new positions. Let's talk through some of these future leaders, though, that popped up on the scans. Like I said, a lot of these are names that we already own. Some of them, no. So you're going to be able to get an inside scoop here on some of the setups that we're looking at. Obviously, I'm not going to give you the full play. That's going to be just for members. If you're interested in taking the trades with us, I encourage you to check us out. Link is in the description below, thetradinginitiative.com/market/research. And if you're not signed up to the newsletter that sends out these free reports every morning, 7 a.m. Eastern Standard Time, join the newsletter. It's free. It's also in the description below. Let's go through a couple of these. First things first. First one that kind of showed up that stuck out to me was this IMPP play. Imperial Petroleum. At first, I would look at this and go, well, I don't know if I really want to own an energy stock right now in a market that is really rewarding higher beta risk-on areas of the market. A petroleum name doesn't necessarily tick that box, but this is actually a marine shipping name. It does have exposure from an industrial standpoint, marine shipping. This is a nice little potential stage 2 breakout above 450. You can kind of see the fib extensions running the way up. This is a higher volatility name where I think most people can get in trouble here is not necessarily buying the breakout, but not understanding that this thing is going to probably whipsaw around. Has an ADR of 5.26, meaning if you're giving this thing a fighting chance, you're going to want to give it at least a 10% breathing room there before cutting it. And for most people, they are not going to be able to take a trade and watch it pull back 8% and still comfortably sit in it. When you're trading these smaller caps, and this is a small cap, a very small cap, this is a $132 million company. When you're trading these really small market caps that are higher volatility, you have to give them room to run. If your idea here is to catch the bigger move, you have to be able to give this thing its space. It's highly volatile. There's some flow on the options chain. I don't think it's a necessarily bad setup here. If we can stick this over 450 close, it'll be the first time we're up and over 450. since 2022. So not a bad little setup, and also IPO'd back here at the beginning of 2022. So that's the first one that shows up. Second one here is a stock that we've owned multiple times over the last 2 years, CEG. This is one of those rare utilities-based stocks that trades like a growth stock. I absolutely love this stock. This has been an incredible trading vehicle for us. You can see kind of the areas that we normally like to buy. Been following our content. You know we love these IPO flips. We bought it back here. We bought it on the way up, and we're buying it again. We bought it again at 193.75 just a few weeks ago. We're pressing up into all-time highs today. This is the power of this setup, though. It puts these types of stocks in front of you. If you can find areas of the chart that you can reasonably risk, I encourage you to buy a couple of these. This has been a monster setup. And now it's funny because a year and a half ago, we would constantly ask ourselves, why is this utility stock trading like a growth stock? Why is it in the queues? What is going on here? It's a $71 billion electric utility. Now, as always, kind of put the puzzle pieces together. Well, they're the largest, I believe, they're the largest conglomerate of nuclear facilities within the United States. And we need that energy, right? We need that energy production for AI, everything else. And so it kind of makes sense now that CEG has acted the way it has over the last 2 years. At the time, though, as always, we're just trading price. This has been a monster stock. It continues to show up on our future leaders. Jackson Financial is another name that we traded. Now, we don't have a current position in this. Unfortunately, we were unable to go ahead and roll this out. There was just a lot of things going on at the same time. But you can see the general idea here. Own it above 49.5 or 50. Own the uptrend. It's really that simple. Upward sloping 200-day moving average. Bullish momentum regime going back to July. This unfortunately fell through the cracks, but we did have a position in this, and it was a profitable trade at the time. Continues to outperform, though, right? So everyone's worried about the end of the world and stuff, and, well, maybe somebody needs life and health insurance, I suppose. This is a mid-cap at $5.96 billion, 2.85 ADR, meaning it moves a little bit slower for a mid-cap name, but if that's your vibe, this is a pretty good opportunity here to try to grab some sort of consolidation. I would assume that somewhere near $90, $91, we're going to be pressing up in towards that overhead supply again. Just based off of fib extensions, people are probably going to be selling up here because everybody uses these same levels. So that self-fulfilling prophecy concept comes back. I'd be looking to add in here around 91 if you don't already have a position here. CNM is another good example of this. Here's a wholesale distributor name, $12 billion wholesale distributor name, 2.25 ADR. Once again, a little bit slower of a mover. So most people would probably get bored trading something like this. But would you be bored owning something that's up 79%? In just under 200 days? It's not Apple. It's not NVIDIA. It's not a sexy semiconductor name. This is a mid-cap wholesale distributor name. Same exact setup by the IPO range breakout high. Future leaders pick this up. Continues to show that it's an opportunity. We do not have a current position in CNM. Shark Ninja, just up until yesterday, all-time highs continuing to push. We do have a position here. We actually have two positions we were able to add into this position just a couple of weeks ago. Who would have expected Shark Ninja would be listed? First off, I didn't expect it. But secondly, breaking out to all-time highs, supposedly in a market where the consumer is really not doing well. News to me, I suppose. Shark Ninja up into all-time highs. We bought it at the all-time high pivot near $55. We added in on the consolidation fractal, some sort of ascending triangle here on the breakout. This is a big win for us. We have members that have been holding this since February, and those contracts are up 600-700% right now off the original 54 flip. So it's encouraging to see this continuing to press. And once again, if you find yourself in a situation where you own a stock like this, it doesn't need to necessarily make sense. That's for somebody else to understand. There's an analyst that's going to upgrade it. There's a guy with a tie sitting in some back office off of Wall Street that's going to tell us why it's going up. We just want to own it as it's going up. Let other people figure out why. That's their job. ONON has been featured on a few scans over the last week and a half as it breaks above this 36.5 area. I believe I talked about it yesterday, actually, in the growth leaders report, if I'm not mistaken. Just a decent trading vehicle here. The one thing that I don't like about this particular stock is I normally like trading names where the 200-day moving average is starting to already slope up. Now, that's a very small variable in a broader trading system. But statistically, if that 200-day moving average is sloping up, it just encourages the breakout to go a little bit more. You got more data pushing you in the direction that you're trying to trade. As of right now, the 200-day moving average, not bad, but it's just There's no slope. It's just kind of meandering horizontally. So I would assume if that 200-day moving average had a little bit more time to correct and move up, that this breakout probably would have stuck a little bit more aggressively. Also, the market's pulling back ever since the ON kind of breakout. The last few days haven't been the easiest up until this big gap up this morning, but obviously that's being faded right now. So we'll see if ON continues. We do have a trade idea out on this. We want it above 36.5, targeting 44.50. We'll see if it ends up playing out. As of right now, we haven't moved our stops. This is a bullish momentum regime, 4.06 ADR. It's definitely a tradable name. This is a good trading vehicle. Not saying it's going to work, but it's a good trading vehicle from a shares and an options standpoint. NATL, here's one that just came out last week. I own this right now. This is a nice little trade. I had absolutely no idea what this was. As a matter of fact, when I originally looked it up, it said that it was a biorobotics name, so I got excited. I don't necessarily care about what I'm trading. I care about the chart that I'm trading and what price is telling me to do. But, you know, I'm interested in robotics, and it's cool, right? So I went and looked it up. It turns out that the original scanner that I found this on lied to me. This is not a biorobotics company. This is a fintech company, and I think calling it fintech would be giving it a little bit more credence that it needs. It's an ATM company, apparently, which is fine. I'm up on the trade. It's a free trade at this point for me, so I'm okay with it. My stops are covered. If this pulls back, I'm not going to lose anything. But this is another example of one of those Shark Ninja, and as you'll see in a second, Fin type of trades where we're breaking out to all-time highs off of a thrust. Own it. Wait until a week or two later to figure out why it's breaking up. But as of right now, this is an all-time high push NATL. Free trade for us. For me personally, stops up into break even. But once again, we'll see a jury's out here in the next 2 or 3 weeks if we continue to pop up. Price target there, $30. It's a pretty nice movie here at 4% ADR. Bullish momentum started in April on the backside of the ER. I like it. Worth a shot. Kava, this is a position that some of us still have. Some of us are struggling to get entered into. But you can see that we tried to own this a couple of different times. We originally opened it on the front side of the all-time high. So we were front running this Kava trade in particular. Listen, we've been buying this particular setup in droves since November, and Kava was the first real name that started popping up on our list time and time again from January through February. So we wanted to front run the fib extension breakout at the 52 area, assuming that we were going to hit all-time highs, and we did. But I will say it was not a necessarily easy hold. As you see, we got gapped down on, and obviously we were threatening to be stopped out just 2 or 3 days after entering it. That's normally not what happens inside of TTI. We're holding our positions for anywhere between 45 to 180 days, and sometimes a little bit longer. So to get stopped out just a few days after taking the trade, it happens, but it's not normal. Thankfully, we held on to the trade because it did not close below our stop, and obviously Kava continued to run there. We added multiple times above the 58, which is where everybody originally started to buy it. Makes sense, right? Buy the all-time high. There was an opportunity for us to add there and just ramp up the potential win, which ended up actually winning really well for us. And we added in slightly, again, on the all-time high breakout north of $70. Not everybody got in here, including myself. I do not have this position right now on the books. Coming up on earnings here, so we'll see if we have to manage a portion of this. But once again, bullish momentum regime going back all the way to last year. Good mover at 5.07 ADR. I think it had a lower ADR when we originally entered it, but still nice. And you can see that we just split the chart in half, own it on the way up. It's really that simple. VLTO, name that we own right now, and we've added in as well. It's the same setup. Same setup as Shark Ninja. Same setup as you're going to see in a second, Fin. Just buy the all-time high breakout. And this is why I talk about this all the time. People are afraid to buy the all-time high breakouts because they think they're paying too much for it. But if you take a step back and you understand that prices trend, it's all about trend. It has nothing to do with what you think is too expensive or what is not too expensive. If price is trending to the upside, all-time highs offer a very simple way to get long. I'm not saying easy. They're not all going to work, but it's simple. Why? Just risk above it and stop out below it. So right now for VLTO, we bought the all-time high range breakout at 83.5. We said, listen, if we fall back within the range just a couple of percent, we're out. If we continue to trend to the upside, we're in. We were able to protect our entry, move our stops up quickly, and then add in on the first price target at 94.5, and obviously we're up and over $100. It's a big win for us. Once again, though, we're not reinventing the wheel. These are very basic setups. You just have to take the initiative and buy the goddamn stock. BTSG is a name that's setting up here. It's pretty simple. No idea what this does. Medical nursing services, $1.96 billion. 3.67 ADR means it moves pretty quickly. I haven't checked the chain on BTSG, but I'm assuming it's probably not that great. So this will probably be a better shares trade. It looks like volume here is super low at only 77,000. So it might not even be a good trading vehicle, but this is on the report. I haven't done enough analytical research on the options chain yet. But from a TA standpoint, above 1175, targeting the 14 bucks. We'll see if it actually breaks out up there. I would like to see a little bit more volume on the backside of earnings and a pop up and over an 1175 and potentially a pullback, something like a BRB setup where we get the breakout and then a pullback just to validate this level as a point of contention and then placing the stop right underneath it. Fall back in the range I don't want it. As of right now, this is a C level setup, but it is on the list, so I wanted to talk about it. PHIN, 2.97 ADR, $2 billion mid cap. Once again, an auto parts name. I have no idea what this is. I think you guys continue to, that's like the number one thing I keep saying. I don't know what a lot of these things do. I have a general idea. I obviously know which sector and industry group they are, but I have no intimate relationship with any of these companies. I'm trading the charts and price and trend, and that's all I care about. PHIN, same setup as VLTO and SN. Buy the all-time high, risk right underneath it. We were able to buy the all-time high, hold through a little bit of the chop, and then off to the races here. We added in on an additional push above 39.5. We're into all-time highs at 44, targeting 53. WRBY, a name that's setting up here. I like this name. I know that a lot of people probably hate this company in particular, but above 18 bucks, there's a clean shot up towards 23.25 in my mind. This is a potential little stage 2 breakout. Assuming we stick this 18 area break, if we close up and over it, that's what I'm looking for. I would like a close up and over and then a potential pullback if there's a high volume day. If I get that, I will be looking to enter WRBY at the 18 area, targeting 23.25 and potentially 31.75. This is a decent mover at 4.27. Kind of choppy momentum, but if the 200-day moving average can start to slope to the upside as WRBY makes its way up towards that 18 area, I think there's an opportunity to own this. These stage 2 breakouts have worked for us for a long time. I mean, like the last... I don't even know. I mean, we bought our original stage 2 breakout way back in January of 2023. Not all of them worked out. The market was still churning back then. But a lot of these stage 2 breakouts have set the tone for the market, and they've continued to run for an extended period of time. This is kind of a different type of stock, 1.98 mid cap. But still, not bad. Above 18 bucks, we'll be taking a stab at it potentially. TOST is another potential stage 2 breakout. Above 26, you can see that we pulled back into the risk-on level here. It's a $14.48 billion company at 3.89 ADR. Software company, mid-cap. This is kind of the theme that's been going on. I wish the 200-day moving average, once again, is sloping up a little bit more, but not a bad little trading vehicle. If we can actually get a thrust over this 26 area, we have no volume to worry about once we get up and over it. You see with this VRVP indicator here, yes, we've traded here in the past, but there was really no volume here. We see a majority of the volume in the accumulation range down here, sub 26 and above looks like 13, 14 bucks. So I like the TOST. I just want to see it thrust up and over 26. I do currently have a position in TOST. YMM. We've been opening up Chinese stocks for the last like 2.5 weeks. Some of them have worked really well. Some of them have kind of sputtered out here. YMM is one of those that have kind of sputtered out. Looking for a move above 950 here, targeting 13 bucks. Just running the fibs to the upside. 3.69 ADR, bullish momentum regime going back to Q1 of 2024. There's a lot to like here, but once again, it is a Chinese-related stock. And although China has been showing a relative push in both price and against U.S. domestic markets and emerging markets in particular, it's still a difficult sector to trade. We're not out of the woodwork yet. Everybody's kind of jumping the gun, including us, right? We have some good positions that are free now, but we're also stuck in some positions that have not performed as well. YMM is one of those. Queb is not up and over our risk on level. Queb being the Chinese internet ETF. That's kind of our guiding light when it comes to China. So we're taking some front runs on this, assuming that the Chinese theme continues, but we could be completely wrong. I have no idea. As of right now, we're going to want to own this above 950. So if you're not in YMM, don't enter this until we break above 950 and close. For those of us that are already in it, we know where our stops are underneath 830. We'll stop out if we need to, but still, this is on the Future Leaders Report, looking like it wants to break out. We'll see if it finally confirms it. BZ is another one that we entered. It's another Chinese-related software name. It's a little bit bigger of a company at 9.38 billion, 3.29 ADR. Once again, is it too early to enter some of this stuff? I don't think it's too early, but not all of them are performing at the same capacity as the rest. As of right now, BZ is a nice little trade. We're up on it, but it is nowhere near what we expected it. We expected it to be at 25 within a few weeks. And right now, I think we're on our second or third week of owning BZ, and it's just kind of puddling around a little bit here. Nice bullish momentum regime. 200-day moving average is sloped up, but we do have some overhead supply that we have to worry about. Price traded back there, and we can see it reflected in VRVP, which could introduce some overhead supply. Not as easy of a breakout. Last one I want to talk through is Zeta. Now, this is a name that I wish I grabbed. We talked about it extensively. We grabbed another chart that looked just like Zeta. So the setup was very similar. I believe the ticker was TPG. That ended up performing well, but not as well as Zeta. So Zeta here is another mid-cap software name, 3.77 billion with a 3.46 ADR. We wanted to own it above 11, but the problem was, if I zoom in here, we gapped up. And what I was looking for was a pullback. I keep telling you guys I like to buy pullbacks. So when stocks gap up and close up and over risk on levels, I don't chase them. And I think that's an important caveat. I don't chase them for two reasons. Contracts, if you're trading options, get completely out of skew. You're paying way more money than everybody else that grabbed it prior, and that puts you in an inherently disadvantageous position. But also, if you're trading shares, your risk to reward gets really muddled up as well. Maybe you were originally targeting a 4, 5, 6 to 1, and all of a sudden it's a 2 or 3 to 1. It's just not the same type of trade. So I wait for the pullback. Unfortunately, Zeta did not pull back all the way to the $11 entry that I wanted. We got down to about $11.20, and I know some people go, "What the hell? Just buy it." Well, I had limit orders on the books. They didn't get tripped. I'm not sitting in front of my computer all day. And then, of course, it rallied. So nice little setup here. Once again, this particular setup, this future leaders idea, can put you in front of some seriously explosive positions if you can sit and wait for a couple weeks, a couple months. Not all of these are going to move super quick. Most of these are going to be small and mid cap names. There are occasionally large cap names. We did enter ARM way back in November of last year off of this exact same setup. Obviously, this was a large cap at the time. This was our single biggest winner. I think it was a $60 billion company when we owned it, but it doesn't have to be a smaller mid cap, but most of the time they are. So if you can hold these things for an extended period of time, I'm talking weeks, months, potentially quarters, depending on if you're trading options or shares, these things can turn into huge, huge winners. Obviously, define your risk. Don't just hold and pray. If you're a technical trader, you have an entry stop and at least one take profit on the books. Follow your trade ideas. Once again, I'm going to give you a look at the Future Leaders Report. If you don't have this, I send a report out every single morning, 7 a.m. Eastern Standard Time. I rotate the report, so there's a different one in your inbox every single morning. You can look at the type of stuff that we are trading, and I give you a description of the actual report as it goes out, so you can see if you're interested in it or not. It's completely up to you. This gives you an opportunity to kind of scan through stuff that we're looking at, and I guarantee you that there's going to be something there that looks attractive at some point that maybe you haven't looked at in the past. All right, guys. My name is Hamilton. I'm here with the Trading Initiative. If you like this type of content, please like and subscribe. Leave a comment below. I appreciate the opportunity to speak with you. Enjoy your lunch. I'll catch you tomorrow.